welcome back, traders and investors, to Pre-Market Prep. We are on the line with Joe McCann. He's the CEO of Slingshot Insights. Joe, can you tell us a little bit about what Slingshot does?
Good morning. Good to meet everyone. Thanks for having me on. So Slingshot Insights is trying to bridge the gap between retail investors and other types of investors and the access to diligence tools that they have versus hedge funds, institutional guys like the big banks. So, we try and connect investors with the absolute top subject matter experts to understand what's really going on with breaking news, new data, court decisions, kind of management opinions and plans, and see what the truth is. Kind of get an unbiased view so you can make your own decision on how you should invest your money.
So when you say bridge the gap, you're referring to the fact that professionals can spend $100 million a year, for example, on information, and the retail investors don't really get access to that. So that's what you're going for here.
Yeah, exactly. So, to talk to the number one guy at the Cleveland Clinic on a new drug that's coming out, it's going to cost you $1,000 an hour. The sell side, or the buy side, spending that, all the time. And, it's just out of the reach for a lot of people. So what we do is we group up as many of our members as we can at the same time, and they split the cost of that exact same interview. So we still get the guy from Cleveland Clinic. We still get the absolute top opinion. But it doesn't cost you, the same amount that these other guys are paying.
So explain how this service works. So you sign up online, you pay to subscribe, and then after that you get the access from that subscription?
Well, we try to make it even more accessible than that. So you can come in and see a project on a topic. Let's say you only care about one or two stocks in the space, and you only think one or two stocks really need that type of call. You can access and pay for just that share of just that interview. So you don't even need to get hooked into a monthly subscription type thing. The whole idea is that we make it digestible to fit everyone's portfolio and whatever they think they need at any given time. We do have a membership option that kind of gets you into company-sponsored calls where, they're free for just members, some other features like management interviews, and you get the access of old transcripts and old interviews that have been completed already. When you're on that membership plan, so you can come in and say, my buddy told me about this stock at a cocktail party last night, but, I don't know anything about XYZ space. Let me see what's been done recently on it. And then, if anything's missing, if you have more questions, you get new ideas, you can pick a specific topic and propose, hey, I'd like to talk to an expert on this, and here are my 5 questions. So that's kind of the way that it works. Most of the people find us because of the actual call we're doing, because, hey, I follow XYZ stock. This looks really cool and interesting to me. So that's really the way that we get a lot of people in. But we really wanted to be targeted to the needs of the portfolio and not getting roped into some sort of big cost or monthly recurring type thing.
So individual people can come in and kind of say, I want information on this. Let's do it. But do you guys also decide? And how do you guys decide what information to get? What alpha to find?
Well, so that's part of the power of what we're doing is that we let our users decide. So you can propose any topic and ask for any type of expert that you can think of. I mean, our company is focused on biotech right now just because there's a lot to learn there and there's a lot of money to be made around catalysts and big events. But the power of the platform in my mind is that anybody from a major hedge fund employee can come on and submit a project request, an interview request, down to an MBA student who's still just trying to figure out how stocks work. And, if there's enough interest in the community, then they say, hey, this project looks really cool. Like, I didn't even think about that stock, or I didn't think about that particular problem. Your project can get greenlit and go live. So it's really a community-driven type concept. I mean, we definitely do seed the database a little bit. And, I spent a lot of years just on my background. I spent 4 years at a big hedge fund at SAC investing in biotech. So I have a good idea of a lot of the projects that should be done. So, we try and show people and try to provide that value as well. But, the goal here is to get every investor empowered to investigate any way they need to.
So let's actually get this into some practical examples of what's going on in the market right now. Let's talk about Sarepta, ticker CRPT. They had a drug, I think, that got FDA canceled. You can correct me if I'm wrong on that, but what kind of information, if we're going to bring this into a practical example, what kind of information can you give off a ticker like that and off of any news?
Right. I think Sarepta is a great place to show what we can kind of do, and we're still waiting to find out exactly whether the expert calls that we've done are right. But basically, what happened is that they've been working on a drug for DMD, muscular dystrophy, for a number of years. The FDA, in order to get a drug approved, they usually host these day-long panels with 9 to 12 experts, and they discuss every piece of data that's ever been generated on the drug. But before that, they released kind of the FDA's current opinion. Before we go talk to the experts, here's what we think. Here's what we're thinking about everything, and it was really negative. So if you look at the chart on SRPT, the stock got absolutely killed. It was down like over 60%, and this is a stock that's had a long saga of, is it going to get to market or not? But basically, the stock immediately on these documents said, it's very unlikely this drug is going to get approved. That the panel itself is going to be positive. So we set up a project, said, let's talk to somebody who has, a lot of DMD experience, a lot of, patients that he treats with muscular dystrophy. He was one of the head of the practice out at UCLA, in the genetics and muscular dystrophy practice, and said, "Yeah, what do you think? Like, here's the company's rebuttal. Here's all the documents. Here's the kind of the angle that the FDA is going with here. What do you think of it?" And he reviewed all the documents and spent 35 minutes on the phone with us. And we had about 45 people, 50 people listening in, and walk through the very clear points that this panel was going to talk about 3 days later. Now, the unfortunate thing here is that the snowstorm in D.C. actually canceled that meeting, but the benefit is that, people on the line right now can still play this event. The stock's still basically trading as though this panel is going to go negatively. And if you read the interview, I think that the odds that it goes negative are still, they still exist, but it's not zero. The chance of it working is not zero. So, he went through statistical analysis that the FDA was doing, efficacy things, need type comments. It was really, really detailed. But to me, that's how you get kind of a differentiated view. And so now, I think personally that when this panel gets rescheduled, there's a better than 50% chance that it goes well. I wouldn't bet my life savings on it, but I definitely think that there's a chance there to have a real rational conviction, a real differentiated view with some support because of this type of work. And so, I think right now, just for guys who are looking to maybe play it, it looks like the end of February is a rumored date to reschedule this thing. You have to have like 12 major doctors come into the same place, and it's a lot of coordination. But I think in the next few days, we'll see like a late February, early March date back on the calendar. And if that meeting goes well, the stock gets back to where it was, which is more than a double from here. So those kind of things can be really exciting, can really change your portfolio's returns. And, you can at least sleep at night saying, well, I have a thesis, I have a good idea, and it's not just me hoping, and those kind of situations can be exciting for investors.
I want to talk about Merck and Gilead for one reason, and that's they both just reported their earnings. What kind of value can you add for people looking to trade off an event like that?
Right. So, the Merck-Gilead story, earnings have become really like that. Gilead's like almost like the biotech Apple now, right? It's trading at under 7 times, and maybe it's just up over 7 now. But that's because nobody knows how long the most profitable drug in human history is going to last. And so for a call like that, it's a little bit more nuanced, but we can talk to, high prescribing, key opinion leader type doctor on the market dynamic right now and see if the pessimism of the market, kind of like the demise of the iPhone, the demise of this Hep C drug, really imminent, or are they going to be able to continue printing money for, the foreseeable future? And so we could do a call and understand about diagnosing, competition. I think the interesting thing from Merck is they came out with a slightly cheaper drug, but it also has a worse label, meaning it's, not quite as easy to prescribe and maybe it doesn't work quite as well. And so, balancing all those things in the real world is hard. And every management team is going to tell you what they want you to believe and kind of the rosy outlook. But, we can dig into the weeds and see, I see 25 patients a day, and I know that insurance is giving me this problem, and I know that I'm still seeing as many people diagnosed as I was 2 years ago. These types of things can really give people conviction, so that when the market turns, when biotech sentiment starts to turn, or when the big quarter that they're supposed to quote unquote miss is upon us, maybe you say, well, I don't think it is, and those are the kind of places where really high quality names, look at Sarepta, that's pretty speculative, but a really high-quality name like Gilead or Merck. Merck, I think, is more exciting at some of the cancer front. We've done some calls on that too, in terms of just using your own immune system to beat cancer. But you look at these bellwether names and you say, well, how do I really have a differentiated view, or how do I really have conviction that the pessimism is not true? This is kind of some of the ways to do it.
We've been talking to Joe McCann, CEO of Slingshot Insights. They will be in attendance at the Benzinga FinTech Awards on May 24th. If you like what you've heard from Joe and want to learn more, you can go to slingshotinsights.com. You can also go to bzawards.com to vote for Joe's company. They are in the research and analytics category. I think Joel wants to hop in with one quick question.
Yeah, Joe, I see that you are a very active investor in a variety of stocks here. I was just wondering if you could touch on some other sectors or issues that have caught your attention as of late.
So I've tried to focus for the most part on healthcare and biotech. I think the biggest thing out there right now is to keep your head down a little bit and not, I've listened to your show this morning. I think you're making a lot of good points about not trying to catch, these falling knives and picking bottoms. I mean, right now, we're kind of in the post-stimulus mindset. Biotech and healthcare in particular are really high beta names and just, really dependent on capital access. So they're tough. And so I think you want to look for quality names that have kind of the money and the capital on their side so that they can be opportunistic and buy some of these smaller names. But you don't want to be the company sitting there with no money or, the need to raise in the next 6 months or 12 months and hoping for a buyout or a bailout, because these guys are smart and they know they can wait and be cheaper tomorrow. So I think that right now, for me, it's a good time to do a lot of fundamental diligence, find the names that are really getting dislocated, that have a pathway that makes sense to getting, back on track, and then kind of wait for the market to settle down a little bit and have some fresh, dry powder to get in there and buy the names that you've done the work on. So right now, I'm trying to back off a little bit, not own as much stuff, and just get the fundamental, work done. Where are the DCFs getting way out of whack from the share price and things like that? Where do I have really high conviction that these things, are going to be worth more 2 years from now? And so, when you get these kind of opportunities, they're almost like sales. I always tell a lot of people that get freaked out. Stock market's on sale right now, but not everything is something you want to own, right? You get that discount rack.
Okay, we've been on the line with Joe McCann. He's the CEO of Slingshot Industries, joining us here on Benzinga's Pre-Market Prep. Joe, thanks a lot for coming on. We'll speak to you again soon.
Thanks for having me, guys. This is great.